Hey, welcome to Pro Trader Strategies Market Commentary. My name's Eric Wilkinson. I'm here to teach you a couple of different strategies you can implement your portfolios, but please remember the past performance of any trading system or methodology is not necessarily indicative of future results. All right, having that out of the way, let's get it on with some economic data and then on to the overall markets. I've got a few things I want to talk about today, but let's talk about the economic data first off. Yesterday, we started talking about some of the economic data coming out was not really showing a recession because a lot of these things were coming out better than expected. And then we got those durable goods orders, which were just not really all that great. Core durable goods is good, but remember, core durable goods is one of those things that strips out some of the more volatile aspects of the number, and that being like the autos and things like that. So durable goods orders also missed as well, which was expected. But then today we've got a couple of other things, mainly just where is it? Sorry, guys. So let's get on with it without further ado. Across the pond, we did get some PMI information that you would probably have heard about. They are pretty much in line with what we were seeing before. French services PMI was the only one that was really in negative territory, being any PMI number below 50 is contraction in the economy. Anything above 50 is expansion. So these are their preliminaries, kind of not the main ones to look at. We look at their flash estimates for these numbers, but just as a little bit of precursor to kind of see what's going on. We've talked about this many times. We were seeing some of these numbers come in a lot worse than expected, or just worse than expected in general. All of these numbers came out better than expected, so nothing to really see there. French only the only one really in negative territory for those. But then we look at Great Britain's PMI, services PMI. It came in at 48.9. Now this is one of their more important numbers that we look at there. They don't do the flash, and it was expected to be 51.0. So it came in below 50, that shows contraction. Now that's the first time we've seen that since basically 2016. So we haven't seen a negative reading for the Great Britain's PMI number, but we're seeing that now. So that is something to keep an eye on for sure. Excuse me. So they came in negative. Then we're talking about our ISM, which is coming in through the Institute for Supply Management. This is our most important number. We don't look at the flash or any of those other ones. We look for the Institute for Supply Management, the ISM, non-manufacturing, which is the surface. That's all that is saying. Purchasing Managers Index came in at 56.1, in line with expectations at or slightly lower than expectations at 58.1. Then we got non-farm payroll, came in at 129,000. Expected to be 184,000, that being much below. That shows that we are not seeing people get hired. Not really a very good sign. Last month's number revised up by about 15,000, let's call it, but not making up for that headline number there. Crude oil inventories, a big build again, 7.2 million barrels, expected to be a drawdown of about 500,000 barrels. So we're talking about almost 8 million barrel build over than expected. That's causing a little bit of weakness here in crude oil. Economic data not being the best that we've seen, to be quite honest. Our ISM obviously still above 50, so that's good, but it was lower than expected. So that's going to cause a little bit of weakness in the markets as people start to see that these ISMs are not that great. We're not too concerned about the service sector, although service is a major part of the United States economy. So we can see here with the crude oil coming off a little bit, I would actually expect it to come back down. I think we're going to start seeing this toggle back between the 60 handle and the 50 handle, all right, back and forth as we kind of battle this out. I think that it really just can't rally with as much inventory as we have in crude oil right now and the lack of demand that we're kind of seeing. All right, gold futures really don't know what to do with themselves now that they're outside of that 13 handle. They've been trying to get up there and knock on that door the last several days and have failed. So not a good sign for gold futures. I could easily see it come down here and test this 1281 area. So thinking that crude oil, because it's just getting a little little overdone to the upside. You can see right here that 13 psychological level. I got it on black, sorry, but this 13 psychological level right here is holding as a resistance. There's nothing in here, you know, if you're doing Fibonacci and everything else, it's not going to show up there. But you can see this volume node coincides with that 1300 area. That's why I talk about the market profile so much, is because it shows psychology. You know, we have these crazy numbers in our head like 1300 in gold that don't really mean anything, but it's a psychological level. So yes, it does mean something. It comes to fruition when it is trading. People recognize those numbers, all right? So you have to as well. And then we can move over to the bonds. Bonds continuing their sell-off. Testing the value area high again. You know, we talk about this. Once it gets outside of those value area highs, it just gets overextended. I expect it to come back down into this area as I talked about it. You know, yesterday I couldn't think of that crazy word, bell curve. And I haven't stopped thinking about the word bell curve since I couldn't come up with that yesterday. All right, so we got the VIX trying to make some move higher today. It's still in the teens. We can call 13s the teens, but definitely not nearly where we would like to see it for trading. Let's take a look at the Dow Jones Industrial Average. We can't really see the VIX move too much higher with the Dow moving higher and the equities across the board on the highs of the day. But you can see with the Dow Jones Industrial Average, we're up about 100 points. And we are breaking through that kind of top in most of the other equities. It looks like we've kind of broken through there with the Dow Jones. A settlement above that would be a big win for the bulls. But this is what I was talking about yesterday. We kind of came up against that value area high, but today that pattern that we were kind of looking at in the Dow with these tops happening have broken through. So I'm expecting this market to go up and test this 78 Fibonacci here. So that's where we're going to next. I think it's going to be 77. What is it? Let's call it 77.65 is where we're going to migrate to before anything else happens. Now that we've seen this shift higher in the market profile, all of these people that have open interest way down here or volume that are short are really starting to panic. And right now it's just who's the first shoe to drop. The guys that are dying to cover, when you see this kind of move in the markets, you know, think about it. If you were a trader and you bought it down here, you're dying to cover that on this move higher, right? Well, the other thing that happened when these guys got short down in these areas, they are dying to puke once we've gotten above this value area high. So now that those shorts are on their heels, I can easily see us trading up to this 77.65 area. So that's where I think we're going to be going. Probably closer to next week anyway. All right, so let me go on to the next one here. So trying playing with my new toy here. You can see again, E-mini S&Ps, we got about that above that value area high. Kind of got stalled out a little bit when we kind of came up and tested this resistance area. But now those, like I said, those shorts are on their heels and are dying to cover. The longs are too. So that's where all of this happens when we get outside of these value areas, is the shorts can't wait to cover and neither can the longs. Everybody's just dying to get out there. And that's why I talk about that psychology so much, because that's where you can actually see where, if I were that person, where would I be feeling it, right? All right, so again, E-mini S&P's overnight inventory got long. Not a whole lot of attempt to flush those guys out because we got pretty decent economic data, all right? Those PMIs aren't the headline numbers or the most important numbers that they're going to be looking at for economic activity overseas, but they were better than expected. So that is going to give a little bit of a fresh look on the economy from most traders. Our ISM did miss, but it was still well above 50 to not worry about going into a contraction anytime soon, really. So that's given us another lift in the equities as we're pushing higher here. So having said all of that, I haven't covered anything. My portfolio is delta long. Remember, I covered my short hedge, my delta hedge with those SPY the other day. Probably covered my TLT a little bit early, obviously, but I'm just shooting to stay mechanical with these trades. But EA Sports, if you guys remember, I have on the Iron Butterfly in there that I did for the webinar. We had all of the levers and pulleys working our way for EA Sports, and it has done just what we had expected. Our market assumption is coming to fruition. We're seeing the volatility come out of that market and trending sideways right in between these two Fibonacci levels. So very close to 50% of my max profit on that, and looking to cover it. I got a working order in there, but I'm probably close to 75 cents away from covering that trade. So it's close, but no cigar at this point. I just want to let you guys know I do have a working order in there. If we see some volatility coming out, I might be able to get some of that. All right, and then on to IBM. IBM, remember we played this trade as a directional move, higher, going back to test this point of control right here, right? So the point of control, we talk about this all of the time, that the point of control is where the most time and volume has been spent. And so what does that mean? If most time and volume has been spent at this area, what does that mean? Well, that means everybody's comfortable. We should have a tendency to slow down there. And when you're just away from it, like when we were talking about putting this trade on in IBM, we thought it was going to break out of this little trend and just migrate up to the point of control, which is exactly where we've gotten. My handle on that is the 145 calls in there. So I'm playing this right now as a working order. I've looked at the delta right now. It's trading right around $4.10 or something like that. So you can see right here, the market is trading at 144. I've got the 145 calls on, right? So if I have on the 145 calls, I'm long the 145 calls. And right now, that price, I'm long the 145 calls, and right now it's trading $4.15, right? Well, if the delta on those calls right now is, let's say it's 45 cents, which I think it is, right offhand. So I get a dollar move higher. That tells us that our price right here goes up by that 45 cents. So if I go up by 45 cents, I'm expecting a dollar move higher. Sorry about that. That gets us at $4.60 for my target price to get out, right? So if it goes up there and kisses my 145 strike, which is what I talk about on those increases of premiums, that should be well and above my 50% increase in premium, because with this IBM trade, I paid $2.70. 50% increase in that premium would put me at $4 even. Well, I'm trading right around there, $4.09 or $4.15, right in between there is like the bid offer on that. So if I can get that dollar move higher, I'm going to be looking to cover it, but I'm going to have a very short lease on this because I have reached my target price on this. So I've got a working order on it, and I'm going to be touch and go on this all day long, okay? Because I want to be mechanical about it, cover these trades when we have those opportunities arising. And that's about it for today. Just a couple of working orders. Haven't really added anything as of right now, but follow me on Twitter at Wolfman's blog, because if I do anything or if I get hit on this IBM or any of those things, I will let you guys know on those social medias, because I want you guys to figure that stuff out real quick. Thursday's webinar, really great strategy. When we talk about assumptions, just like this, with my assumption here, I just thought it was going to kind of come up there. Well, how do we find the best strategy for that market assumption? Well, there's a lot of things that go into it. We've got volatility that goes into it. We've got these Fibonacci's. We've got the market profile we've got to consider. We can throw up some Fibonacci's here to get our support and resistances, but we've come up with an assumption on a direction. We know what the underlying is. We have to make sure that it fits all of my rules in order to implement a strategy for any type of situation. And I'm going to go through that. You have the assumption, you have the underlying. We're going to find the strategy that is most appropriate for that directional assumption. And ultimately, we will increase your probabilities of success. All right. So check that out at protraderstrategies.com. That's all I got for you guys. Other than, if you can't take that, take it easy. Hey, one last thing. Comment on this video below. Let me know what you like or dislike about it. Give me some comments. I'd love to hear from you guys. And that's all I got. All right? Take care.